It is 10:40 a.m. Pacific Daylight Time. It is the 15th day of July, 2026. This is episode 1352 of Bitcoin And with me, your host, David Bennett, reading you all the news that you can use about Bitcoin and macro from around the world so you'll be able to stay up to date with what the hell is going on in Bitcoin today. A little late today, but some things just can't be helped. A couple of bits of news. It looks like we're going to do away with daylight savings time, except that we're going to actually have daylight savings time permanently. The House has passed their version of the bill. It's going to go on to the Senate, but they have selected to keep daylight savings time permanently and not standard time. And as you imagine, there is already a fight on social media about how that's not good. That there's the standard time plebs, and now there is the daylight savings time plebs, and they are fighting it out on social media. And it's embarrassing that we can figure out how to fight with each other over the stupidest shit. Dude, just get rid of the time changes. Flip a coin. I don't care. I need to stop with this whole switchover thing. It's freaking ridiculous as well as unhealthy. Also, Bitcoin Twitter has come back. Apparently, they've changed the algorithm, and now the For You place on Twitter actually shows you a whole bunch of stuff from most of the people that you actually follow. So, I don't know, man. I don't know. It seems to be a little bit better of an experience, but honestly, it's just a whole bunch of plebs just jumping up and down about, honestly, the wrong shit. So what's in the news today? Well, South Korea wants to bring digital assets under a new state asset management system. Japan, they got a vote that's reclassifying Bitcoin and crypto as financial assets. New Hampshire's in the news with a Bitcoin reserve. We'll see how that works out. And the U.S. Treasury. What's the U.S. Treasury doing? Well, they froze another $131 million of crypto. We'll tell you who got absconded with. Stripe wants to buy PayPal. That's going to be in the second part of the show. And then Brussels seems to have not expected some fallout from Binance not being able to get a MiCA license. And it's definitely not what they expected, and it's certainly not what they want, and I'm here for it. And then we're going to end up in the Czech Republic. They don't like Polymarket either. Let's get into South Korea. So South Korea to bring digital assets under new state asset management system. This is out of Cointelegraph. South Korea plans to adopt the National Asset Basic Act to update the country's state asset management system from the outdated State Property Act of the 1950s. The Ministry of Economy and Finance hopes to modernize the management of national assets and explicitly includes digital assets and intellectual property, broadening the definition of state assets, the MOEF announced during a briefing at the President's Blue House on Wednesday. As part of the reform, the ministry also reiterated plans to tokenize government bonds on a blockchain to reduce transaction fees as part of a 2027 pilot project. It also plans to explore the tokenization of state-owned real estate to encourage retail participation and share part of the generated returns with the public. The move represents a fairly significant regulatory development for South Korea, which has one of the world's most active retail crypto markets. The framework seeks to shift the management of state-owned property from a legacy real estate-focused framework to a new model based on value creation. On Tuesday, South Korea's government unveiled its 2026 economic growth strategy for the second half, which includes plans to conduct a 2027 pilot linking tokenized government bonds to its central bank digital currency infrastructure. And I ask you, ladies and gentlemen, what could possibly go wrong? The plan calls for authorities to study how to make the Bank of Korea's CBDC infrastructure interoperable with other blockchains. The idea was first outlined publicly on July the 1st by BOK Governor Hwan Sung-shin at the European Central Bank Forum on Central Banking. Authorities plan to introduce measures later this year and said the pilot would form part of a broader effort to create a, blockchain economy. On April 16th, South Korea's MOEF announced a pilot project that will use tokenized deposits to execute government operational spending, with a full rollout set for the fourth quarter of this year. Changes to South Korea Capital Markets Act and Electronic Securities Act, the country's first tokenized securities framework, are both scheduled to take effect February the 4th, 2027. The framework will legally recognize blockchain ledgers as valid securities registries, bringing tokenized assets under the Financial Services Commission's jurisdiction out of the current experimental stage. And that's the end of the article. So while 80% of what they're doing is kind of bullshit, I mean, tokenized assets, tokenized bonds, a lot of that is just, it's not going to work out the way they think it's going to work out. But the fact that they're giving legal frameworks around digital assets that's just par for the course of what's coming in the future. It ain't going to be just South Korea. Country after country after country are going to fall in line, and Japan is no different. Japan's landmark vote reclassifies Bitcoin and crypto as financial assets. So another domino in the stack falls. Bitcoin Magazine writing this one, Japan's parliament passed an amendment on Wednesday that reclassifies cryptocurrency as a financial asset, a shift that pulls Bitcoin and other digital assets out of the country's payments regime and into the framework that governs stocks, bonds, and investment trusts, according to a report. The change strips crypto of its prior status under the Payment Services Act, where regulators treated it as a means of settlement, and folds it into the Financial Instruments and Exchange Act, the same statute that oversees traditional securities. The amendment moves Bitcoin and other crypto under a single investor protection standard. NHK reports the change takes effect within 1 year, with a target of fiscal year 2027. Japan's cabinet first approved this measure as a draft amendment in April of 2026, but that step only sent the bill toward the Diet for debate. Wednesday's vote marks the final enactment to law alongside formal approval of a separate plan to cut the top tax rate on crypto gains from 55% to a flat tax of 20% starting in 2028. The move rewires how Japan supervises the entire asset class. As financial instruments, crypto assets now fall under insider trading rules that bar issuers, exchange operators, and other parties with access to non-public information from trading ahead of events such as token listings, delistings, or major technical incidents. Exchanges face new disclosure obligations as well. Platforms have to publish data on each token's issuer, blockchain design, and volatility profile, a standard that mirrors the reporting demands placed on securities firms. Regulators also gain broader market surveillance authority over the sector, according to local reports. Penalties climb under the new law. The maximum prison term for unregistered crypto operators rises from 3 years to 10 years, while the top fine increases from 3 million yen to 10 million yen, which is about $62,000. The tougher enforcement signals a move to treat crypto misconduct with the same severity as securities fraud. The reclassification carries two consequences that reach beyond compliance, however. First, it opens a path for spot Bitcoin exchange traded funds because FIEA governs the product that funds can hold. Moving crypto under its umbrella removes a structural barrier that kept Japanese asset managers from launching their own regulated Bitcoin ETFs. Secondly, it clears the way for a complete tax overhaul. Japan taxes crypto gains as miscellaneous income at rates of 55%, among the steepest treatment in any major market. Lawmakers approved a plan to cut that to 20%, a level that matches the tax on stock gains. The reform arrives as Japan accelerates a broader Web3 push, and as regulators weigh reserve requirements for exchanges that resemble the buffers held by securities firms. User accounts on Japanese exchanges have grown, and domestic crypto firms are positioning for a wider base of retail investors. For an industry that has long viewed Japan as an early and cautious mover, the vote marks a decisive turn towards legitimacy. The country that once served as a template for crypto regulation is now aligning digital assets with its own capital markets, a decision that could pressure other jurisdictions to follow. And they will follow. More dominoes are going to fall. Now, embedded in both of these is the fact that we can't get away from. More regulation is not what we wanted to hear. But that's the only way these people can operate. It's going to happen, which is why you should just buy Bitcoin and hold Bitcoin under your own private keys. Do not let anybody custody your own Bitcoin, because then you're going to end up swimming in a pool with a whole bunch of these people that you don't really want to be swimming with, because they have a tendency to pee in the pool, and that's just gross, right? Make sure that you stack your own Bitcoin under your own private keys. Do not let anybody else work it for you, because they're going to be under regulatory pressure that you do not want to experience. I guarantee it. But here's the thing. This is the big takeaway here, is that Japan was never able to issue their own Bitcoin spot ETF, or just a regular old trust ETF where, they're not actually buying spot. It could be a derivative, but spot Bitcoin ETFs in Japan are going to happen now. So be prepared. And does that mean that the price goes up? I don't know. Probably at first, but it's going to introduce even more volatility, because now people that don't actually understand Bitcoin are going to have access to Bitcoin, and all they understand about it is number go up or number go down, and their psychology is going to reflect accordingly. So just understand that. It's not exactly good nor bad news. It's just the extension of the market. On to New Hampshire. New Hampshire follows Bitcoin Reserve with blockchain basic laws signing. This is decrypt.co. New Hampshire Governor Kelly Ayotte, I guess that's how you pronounce it, helped make the state into one of the crypto-friendliest in the nation when she signed HB 639 into law last week. Known as the Blockchain Basic Laws Act, the bill provides protections for cryptocurrency innovation and use in the state while allowing for the creation of a special blockchain dispute docket in the Superior Court. Quote, with the governor's signature on HB 639, New Hampshire has once again demonstrated that it intends to lead the nation in blockchain innovation, said New Hampshire Representative Keith Amman, the bill's primary sponsor, in a statement. Quote, the blockchain basic laws protect one of the most fundamental rights of the digital economy, the right of individuals to control their own digital assets through self-custody. They also provide clear legal protections for blockchain developers, miners, validators, entrepreneurs, and businesses building the next generation of financial technology, he said. The state's latest blockchain legislation follows its passing of a strategic Bitcoin reserve last year. The bill, signed by the governor in May of 2025, allows the state's treasurer to invest up to 5% of its public funds in the leading cryptocurrency asset alongside precious metals like gold and silver. Amon, who played a key role in that bill's passage, told Decrypt at the time it was, quote, one little way our state could hedge against inflation in the future. Further quote, today, with the signing of HB 639, we have taken yet another major step by enacting one of the most comprehensive blockchain rights laws in the country. Entrepreneurs, investors, developers, and innovators across America should know that New Hampshire is open for blockchain business, end quote. Despite the advances, the state's executive council last week blocked a proposal that would have allowed the New Hampshire Business Finance Authority to facilitate a Bitcoin-backed municipal bond. Okay, so the only thing, even though that they're saying blockchain a lot in this, this ends up being really important because there are protections for self-custody. Now, they also say they provide clear legal protections for developers, miners, validators, etc. But from a federal standpoint, the federal government is going to supersede that. So honestly, those protections just don't matter. They help protect developers and whatnot from the state of New Hampshire, but they're not going to be able to protect it from the federal government. So that part falls kind of short. However, the self-custody aspect, that's the most important thing, even though it's called this Blockchain Innovation Act or whatever the hell they're calling it. So from that standpoint, it is important. And it gives a nice flavor to, well, what New Hampshire is trying to do. And speaking of flavor, Kids Warp Vanilla Shop is open for business. You can get chocolate vanilla paste. Yes, you can. Chocolate vanilla paste is on the docket. So what is it? Well, it's chocolate with vanilla beans, and the vanilla beans have been macerated in like some of the highest quality spirits, alcohol that Kid Warp can find. And then the whole thing is macerated into a paste. And you can use this anywhere that you would use vanilla paste. In this case, it's chocolate vanilla paste. So, figure out what you're going to do with your flavoring or whatever it is you're making and act accordingly. But he also makes regular vanilla paste as well. And you can get it at takemysats.com/Kid Warp's Vanilla Shop. Don't worry. The URL is going to be in the show notes. So you can just click on it and get right to his shop. And he takes Bitcoin. And that's important because it's the Circle P. Circle P is open for business. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services, but you will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. And Kid Warp's Vanilla Shop is definitely in the Circle P. So go to takemysats.com/Kid Warp's Vanilla Shop and use the code Bitcoin because not only does that tell Kid Warp that I made a sale for him here on the Circle P in the Bitcoin and podcast, but you get 10% off. So this vanilla paste, you can use it everywhere that you would use vanilla extract, but man, vanilla paste is just a different animal altogether. Go to Kid Warp's Vanilla Shop, get yourself some chocolate vanilla paste, use code Bitcoin for 10% off. On to the U.S. Treasury Department. They've frozen $131 million in Iran-linked crypto as Middle East tensions rise. My big question here is, how come that wasn't seized before? Why did you wait? You've already seized a lot of their crypto. Why did you wait to seize this crypto? What's going on here? Maybe Felix from Cointelegraph will tell us. Scott Bessent, U.S. Treasury Secretary, confirmed the government ordered the freezing of more than $130 million in cryptocurrency held in wallets linked to Iran. Earlier on Tuesday, blockchain investigator Spectre pointed to on-chain data showing Tether froze 4 Tron wallets holding $131 million worth of USDT. Bessent confirmed on X that the wallets were tied to the Central Bank of Iran. Quote, U.S. Treasury is committed to disrupting and degrading Iran's illicit financial activities, including its abuse of digital assets, and will continue to aggressively follow the money and deny the Iranian regime access to the proceeds of its illicit revenue schemes, end quote. The asset freeze comes amid a collapse in the ceasefire between the U.S. and Iran. The U.S. said it had renewed its blockade of Iranian ports, while the U.S. Military Central Command announced a new wave of strikes in the country. Meanwhile, Iran's military claimed on Tuesday that it carried out drone strikes against U.S. military facilities at Jordan's Al-Azraq air base. The move follows a similar freeze in April, when stablecoin issuer Tether confirmed it had frozen more than $344 million of USDT at the request of U.S. authorities. In May, Besant said the U.S. had seized around $1 billion in Iranian crypto assets as part of the U.S. financial pressure campaign against Iran known as Operation Economic Fury. Quote, through Economic Fury, the Treasury Department is disrupting the foreign procurement networks that support the Iranian military's efforts to acquire weapons. Treasury has frozen the Iranian regime's assets, severely disrupted its economy, and dismantled the Iranian war machine. Treasury will not tolerate any support of the Iranian military. And they did not answer the question as to why this extra money being frozen just now. Did they not know about it? Did Tether not know about it? I mean, would they just leaving $131 million on the table after freezing over like around $1 billion worth of quote unquote crypto assets from Iran? I don't know, man. As usual, something smells fishy. Let's run the numbers. CNBC futures and commodities. Brent North Sea is down 0.4%, but still chilling out at $84.37 a barrel. West Texas Intermediate is down just over a half to $78.89. Natural gas is the hedge, in the green 0.76%, and gasoline is up 2% to $3.29 a gallon. Murban crude falling over 4 points to $78.54. Metals mostly in the green. Palladium sideways, but green. Gold is up 0.15%. Platinum is up 1.5%. Silver is down 1.5%, back down to 58.2. Ooh, copper is in the green, but moving sideways. Ag is mostly in the green today. Biggest winner this time is wheat. Wow. It's up 5.25%. Biggest loser is coffee, down 0.5%. Live cattle down 0.6%. Lean hogs up 2.67%. And feeder cattle up as well, 0.5%. S&P is up 1/3. NASDAQ is down 1/4. The Dow is up 1/4, and the S&P Mini is up 0.15%. And then there's Bitcoin at $65,040. That is now a $1.3 trillion market cap. And we can purchase 16 ounces of gold with our one Bitcoin, of which there are 20,056,598 and 0.01 of. Average fees per block, 0.02 Bitcoin taken in fees on a per block basis. There's about 45 blocks carrying 98,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte, low priorities 0.6. 903 exahashes per second is the security of the Bitcoin network. I remain unconcerned. From yesterday's episode of Bitcoin and seized Bitcoin moves, LNPC with a Petra boost, 7,777 sats, says my band Leotia are performing live this Thursday, the 16th of July, exclusively over the free and open internet. Live.theindybeat.fm. Live.theindybeat.fm. Mirrored across the nostr protocol via npub LNPC. That's INPC, not L. Oh, okay. So I've been getting that wrong this entire time. INPC. That's Thursday at 1900 UTC. Protocols, not platforms. Cheers. I'm going to have to watch that. Jay with 4,200 sats says, thank you, sir. No, thank you. Code with, a row of ducks. 2222 says, appreciate you. Not as much as I appreciate you, Code. And my good friend Psyduck has come back into the fold. 749 sats. And he says, Psyduck. Jason High with 250 says, thanks for the show. You're welcome. Nick Dose with 243 says, cheers. And Nostr Gang with 101 says, thank you. No, thank you. That's the weather report. Welcome to part 2 of the news that you can use. Stripe mounts a blockbuster $53 billion bid to buy PayPal. I honestly thought that PayPal would command a higher price than $53 billion. All the numbers are fake and gay. It doesn't matter anyway. CoinDesk. This is written by Jamie Crawley is writing this one. Payments giant Stripe offered to buy PayPal at $53 billion, according to the Financial Times. San Francisco-based Stripe made the $60.50 a share offer in tandem with private equity firm Advent International, according to the report. The bid represents a premium of 28% over PayPal's Tuesday closing price of $47.37. The New York-listed payments provider shares have surged by more than 18% to $56 and a dime in pre-market trading. The bid follows an earlier expression of interest, though PayPal has been reluctant to engage with the offer thus far. Neither PayPal, Stripe, nor Advent responded to a request for comment. So, Stripe wants to buy PayPal. Stripe's big enough to handle it, but PayPal's infrastructure, I mean, I don't know. And what, are they going to inherit PayPal's, demonstrably easy way to freeze people's money because they've done it on so many occasions? Not that Stripe hasn't. It's just that do we really want Stripe and PayPal to consolidate? My answer is actually no, but not because I don't like capitalism. I mean, I do. It's just, it would be better to have multiple online payment companies than just, one or two. So, and if Stripe gets a hold of PayPal, that's probably going to give us like what? Maybe like 3 non-Visa owned, non-MasterCard owned online payment processors. Not sure if that's good. My gut feeling is this is not going to happen, but you never know. Speaking of never knowing what's going to happen, the exodus from Binance that Brussels had not anticipated. Federico Rivi, writing for Atlas 21. On the 1st of July, 2026, Binance suspended services in the European Union after failing to secure a valid MiCA license. The move was anticipated. The regulatory framework had been designed precisely for this, to impose order, protect consumers, and channel flows toward compliant platforms. But what Brussels models had not accounted for was where the funds would actually end up. According to Binance itself, approximately 70% of funds withdrawn by European users after the MiCA deadline went to self-custody wallets, with only around 30% directed toward alternative regulated exchanges. The figures are unverified by third parties and lack methodological detail. These are Binance's own uncertified internal data, and the exchange has every incentive to present the exodus as a deliberate choice rather than a disorderly flight. That should be stated plainly. But even allowing for margin of error, the behavioral signal is hard to dismiss. When European users faced a fork in the road, migrate to another regulated platform, or just take custody of their own Bitcoin keys, the majority chose the keys. This is a market response, and it should be read as one. The MiCA framework entered into force in June of 2023 and was applied progressively. Stablecoin rules became operative from June the 30th, 2024. Rules covering exchanges and digital asset service providers from the 30th of December, 2024, with a transitional period that ended on July the 1st, 2026. The stated objective was to create a single European market for digital assets, establish authorization requirements for exchanges, and strengthen protections for retail investors. On paper, a coherent architecture. In practice, it has built a system in which every significant transaction passes through authorized entities subject to extensive KYC obligations. This sits alongside the travel rule, which requires the collection and transmission of identifying data on every crypto transfer between exchanges with no minimum threshold, and demands additional verification of wallet ownership for movement towards self-hosted addresses above 1,000 euros. Wow. God dang, man. Every compliance layer added to a regulated exchange is an additional control point over the user's assets, what they sell, how much, when, and to whom. A self-custody wallet cuts that chain. Private keys remain on the user's own device. No intermediary can freeze the account, block funds, or hand over the transaction history to an authority on administrative request. There is structural irony in MiCA's outcome worth noting. The regulation was designed to steer users toward, quote, safe platforms, that is, toward intermediaries under public supervision. It has produced the opposite effect. It has pushed a significant share of users out of the intermediary orbit entirely, taking their assets beyond the reach of European regulatory oversight. So there you go. They did not expect that. And yes, let's reiterate that this is Binance's own internal data. Do we really know if that many people went to self-custody? But you can sure as shit bet that a lot of people did. And we should be doing that anyway. We should not be letting intermediaries hold our private keys. I can't iterate that enough. This is going to be a short show because this is the last one on the docket. Czech Republic moves to block Polymarket over unlicensed gambling. So it's not just the states in the United States that don't like Kalshi and Polymarket. It's now the Czech Republic itself. From the block, Brian Danga going to finish us off. The Czech Ministry of Finance added prediction market platform Polymarket to the country's list of unauthorized internet games earlier this week, making it the latest European jurisdiction to move against the platform over unlicensed gambling. The listing, published July the 13th by the ministry's Department of Procedural Agendas and Gambling Regulation, places Polymarket among other domains the government considers to be operating outside of the country's gambling framework. Internet service providers must block access to the platform within 15 days of its publication on the list under Czech gambling law. The Institute for the Regulation of Gambling highlighted the ministry's decision in a press release on Tuesday. Quote, "It's not about banning innovation. It's about ensuring that the same rules apply to everyone who offers betting for money." And that was Jan Rehola, director of the Institute for the Regulation of Gambling. The Czech Republic joins a growing list of jurisdictions that have restricted access to Polymarket. Germany, Belgium, Romania, Switzerland, Poland, Greece, Cyprus, Portugal, Spain, and Ukraine, while Brazil took similar action this year, are all countries demonstrating their ire. The Institute also cited actions or warnings from gambling regulators in the Netherlands, France, as well as the UK, which have maintained that prediction markets may be subject to gambling rules despite describing their products as event contracts. So the United States and the European Union, they don't like gambling, or actually, it's not that they don't like gambling. They don't like it when they can't fully control it, which basically means being able to take a cut of the profits. That's what it all boils down to. They're not trying to protect you. They're trying to get more money so they can, drop bombs on people or whatever it is governments do. That's the end of the article. It's also the end of the episode. If you want to give freely to the Bitcoin and podcast, you can do so through any Podcasting 2.0 app. Just give me a boost or stream me Satoshis. Or if you don't want to do that, go to bitcoinand.com. That's bitcoinandshow.com, bitcoinandshow.com, and sign up for a $5 a month tier or a $50 a month annual subscription. You get the same thing that the free guys get. It's just an expression of your love and support. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.